me jump on here. There's a bit of a lag as far as it comes to restream. So, hey everybody, I see we have a bunch of folks here. It looks like 43, about 43 folks, and I'm sure we're going to be joined. I see we have. Oops. Okay, sorry, I've got to turn this off. I'm getting some echo. Okay, sorry folks, we're testing out a new software. This is the first time we've done something like this, so bear with us as we just kind of get set up here. Everyone on YouTube, welcome. I see we have a lot of guests from looks like South Korea, I imagine. 안녕하세요. To all of you folks, thanks for joining. I know it's a little bit early there, so we really appreciate you being getting up early and joining us. Will and Amir, can you give me a thumbs up if you're able to see the stream and hear me fine? And maybe if you can say hi. Yeah, test your audio.
Test.
Hey everyone, thanks for tuning in.
Okay, great. I think with that, why don't we officially get started?
I have something you want, and you have something I want. So we should make a deal. To make a deal, we come to the table. The problem is the table belongs to someone else. So when we sit at their table, a middleman controls the process, holds our valuables, and charges us a lot of money. It's risky, slow, and expensive. What would it look like if this weren't just a table, but a network? A network that no one owns, and we could trade directly with each other without anyone in the middle. Enter 0x. 0x is a decentralized exchange protocol. It's a set of rules that businesses and developers use to create a network of exchange that no one controls. With 0x, anyone can come to the table. This means that if I want to trade my currency for your currency without anyone else, I can do that. Or if I wanted to trade my currency for some real estate, I can do that too. I can trade anything for anything with anyone. See, 0x isn't just about charts and order books. It's about the exchange of value. Developers can use 0x to create marketplaces for the entire world of assets, old and new. They can create markets for game items from your favorite games, or for digital commodities like storage or computing power. Even digital art and collectibles. The 0x protocol is open source and governed by its users, removing all geographic barriers and opening the door to markets that could never have existed before. And it will all be possible thanks to 0x. Come to the table.
All right, welcome everybody to our first ever 0x Live AMA. This is a little bit of an experiment for us, so bear with us. Hopefully we won't have any technical difficulties, but if we do, please forgive us. We'll do it better next time. And we do hope that this is one of many similar events to come. With that, let me just introduce myself. My name is Brent. I'm the Community and Ecosystem Growth Manager at 0x, and I'm really excited to be joined by Will and Amir, who are the co-founders and co-CEOs of 0x Labs. Welcome, guys.
Thanks, Brent. Excited to chat with the community and hang out.
Same.
Awesome. So for those of you who are regulars on this call, we have normally a monthly community and governance meeting. If you're subscribed to the YouTube channel, you can take a look at the recordings there. But it's really an opportunity for us to share what we're doing on a monthly basis, as well as talk about exciting things going on in the ecosystem. So we thought with, speaking of exciting things, you know, there's been a lot of things recently happening. And rather than have that normal monthly meeting, we thought it would actually be a fun thing and really helpful for the community to be able to ask their questions on all of those things that have been going on recently. So that's why we decided to actually have this in lieu of the normal meeting. Just one quick housekeeping, you know, we're gonna welcome questions from the audience. So please, if you have a question for Will or Amir, drop that into the YouTube chat. The only thing we do ask is please no questions related to ZRX price or trading. Those questions will be ignored, and so we won't answer that. Other than that, please drop your questions. We'll try to get through all of them in the time that's allotted for the event. We do have some starter questions, though, that were collected on our Discord and Twitter accounts. So we'll try to mix those in as well. With that, Will, Amir, do you mind just briefly taking an opportunity to introduce yourselves? And I will actually drop in the first starter question just to get us started, which is what are your main day-to-day focuses within the company? So within your introduction, if you can also answer that, that would be terrific.
Cool. Thank you, Brent. I really appreciate you putting all the effort into setting this up and having everything so organized. So I'll introduce myself first, I guess. Yeah, I'm Will. Before I got into Ethereum, I was doing engineering and research, and I was kind of on more of like a academia or research track. I was doing a PhD program in engineering at University of California, San Diego, and also spending time working at a research lab called Los Alamos. And around 2 years into the grad school program, learned about Ethereum. I had been following Bitcoin since much earlier, like 2010 or 11 or something, and always thought it was really cool. But then when I found out about Ethereum in, I think, early 2016 or late 2015, kind of felt like the most important invention. Focus my attention on Ethereum, and so I dropped out and moved to San Francisco, and then I met Amir. Do you want to give a quick intro, Amir?
Sure. Yeah, so I first got into crypto, I don't know, around 2014 or so when I was working at a prop trading firm called DRW, and you know, the crypto markets were still very volatile even at that time, and kind of got interested in the trading side of things first. But over time, you know, as I started investing in it and learning more about the technology, I just really fell down the rabbit hole, and you know, was pretty convinced that this technology would change the world, and that this is what I wanted to dedicate my life to. So in around the beginning of 2016, decided I want to get into the space full time, and yeah, just by pure coincidence, ended up meeting Will around the same time he was looking to get into the space, and kind of just hit it off and decided to work together. And actually, yeah, when I first met Will, he was already working on a decentralized options protocol, and the plan was to work on that together. But over time, you know, we got kind of closer to completion, but realized that it would be really difficult for this to take off without any place to trade them. And you know, back in 2016, even centralized exchanges didn't list a lot of assets. Like I think Ether was on just a couple different centralized exchanges, and then you know, Bitcoin was on all of them, of course. But like, to expect an exchange to list options was quite a leap. So we decided to build an exchange solution first, and we, you know, realized that a lot of the different projects we were talking to at the time had the exact same issue. So kind of expanded the scope into an exchange protocol, and that's how ZeroX was born, and haven't looked back since.
Yeah.
Awesome. Great. Thanks for the introductions. Sorry, I might have been a little premature in asking the day-to-day focus questions, but why don't we jump into it now? Will, Amir, I think there's curiosity on, you know, how do you spend your days?
No worries. So initially we were both pretty much, so Amir and I were doing just basically all engineering work, like smart contracts, front end. Looking back, it was like pretty embarrassing, the quality of some of the front end code, but this all, you know, the smart contracts were all right. And yeah, I think we spent like a month like locked away at like my mom's house in the Bay Area because she was like not there at the time, and we just like spent a month there just purely focused on like cranking out code. But as time's gone on, like for both of us, like we've both really kind of transitioned away from technical work, and a lot more time spent on building the team, recruiting, fundraising, of course, and product roadmap and vision, and also just our team is around 35, 40 people, and keeping everyone pointed in the same direction is something that is pretty challenging once once you go from like a really kind of small team to like a broader organization. So that's probably true for both of us. But yeah, anything else you want to add, Amir?
No, I think that covers the gist of it. It's really broad variety of things, kind of involved in most areas of the organization. Yeah, I think hiring takes up a lot of time, especially I want to give a hiring shout out here in case anyone is looking to get into crypto or interested in joining us. I think we have somewhere around 20 open roles or roles that will be open soon across engineering and a lot of non-engineering areas as well. Also still oversee engineering. When I started Xerox, I was CTO, but yeah, no longer am contributing code or anything like that. That's about it.
Awesome. I see we have a question from Ivan about what are the 5-year expectations for the project? Given that this is crypto, 5 years, anything can happen. We do have actually a starter question, similar vein. Maybe we can actually just use this one. But Ivan, thanks for asking that question. This one is a little bit more realistic. So to help reach Xerox's mission of enabling all tokenized value to flow freely, what is the focus for the project in the next 2 years?
Multichain, I think. So our entire thesis, like the reason why we initially, started working on 0x and like what's kind of guided all our decision making over the years has been kind of this vision that all forms of value are going to end up tokenized on public blockchains. Everything from stocks and bonds and fiat currencies, but also things like cards and airline miles, and just everything of value. And over the last 4 or 5 years, the space has come incredibly far, like probably further than either of us would have anticipated, I imagine. But even now, like we're brushing up against the scaling limitations of Ethereum. And there's a lot of smart people working on scaling solutions. And there's also a lot of people that are working on different blockchain technologies. And so I think like probably the main major theme for us and probably the broader space over the next 2 years is scaling horizontally through having many different blockchains that have kind of bustling ecosystems in parallel.
Yeah.
Amir, anything you want to add to that?
Yeah, I mean, I don't, I guess the goal here is scalability. And I think right now, the best solution for that is multi-chain. I think we'll see where it goes over the next couple of years, but, it's, our mission is to like provide, as much access to the entire world as possible. And I think, because there's so much demand to use Ethereum right now, it's really difficult to achieve that mission. So really our end goal here over the next couple of years is to provide access to as many people as possible through 0x. I think within 2 years, like, broadly speaking, blockchain technology will be able to scale to, probably hundreds of millions of users. I think it's like, pretty much there. I think it's just a matter of time, and there's enough momentum behind scaling technology right now that I'm pretty confident it'll work out soon.
Awesome. So this is another kind of looking forward question from the fine folks at Ledger Status. Josh Bryan, How's it going? Hope thanks for all the support. Ledger Status is curious. How will 0x bridge liquidity between L2 and sidechains with L1? Can chains be aggregated someday the same way that L1 dexes are? Thanks for the question.
Yeah, thanks for the question. Amir, we were just talking about this. Amir, did you want to take this one?
Yeah, sure. I mean, we're definitely looking into different bridge solutions. I think there are already some trustless bridges between EVM blockchains out there. I know Near just announced one today. I know Polygon already has one, and then I know Connext is working on bridging EVM chains via state channels. Probably missing a bunch, but these are all things that we are looking at. I guess to answer the second part of the question, can chains be aggregated someday the same way that L1 dexes are? I think technically speaking, yes, they can. I think will they is a different question. I'm not sure yet. I think it really depends on how the user experience ends up looking. Like how fast these chains are able to be aggregated. What types of guarantees do each individual chains have? Because right now, if you're using a specific blockchain, I think you pretty much know in advance which blockchain you want to use. And that's probably a function of like the wallet you're using. Obviously MetaMask is the most common one, and you need to select your network from the dropdown, right? So you already know, like, I'm going to be transacting on Ethereum, or I'm going to be transacting on BSC. And then, finally, I think there's still an open question around the cost of aggregating liquidity across chains versus just doing your trading on one highly scalable chain and then bridging it elsewhere as needed. I would say overall, we are more convinced that the latter is going to happen. Like people will probably do their trading on scalable chains and then take them back to Ethereum as needed. But kind of keeping an open mind around it, and we'll see how things shake out.
Yeah, in the near term though, like in the next 6 to 12 months, I think like it's basically going to be people that are trading like locally on whichever blockchain they're on. So if you're, if you hop over and you're on like Polygon, you're probably just like trading with on-chain sources of liquidity, or just, sources of liquidity that are specific to Polygon. And if you go to like BSC or Ethereum, you're kind of, hopping between different like worlds or like little galaxies, and you kind of trade within the context of that galaxy. Aggregating liquidity, say if you wanted to like pull liquidity from like a little bit from BSC, a little bit from Ethereum, a little bit from Binance Smart Chain, like you could technically do it, but I think it would just be super expensive and like less. It probably would make more sense to just pull liquidity from like one chain, if I had to guess, except maybe there might be like some exceptions for like massive trades or something like that.
Yeah, one other thing I'll add, actually, I think in the long run, there won't be as much need to aggregate all the chains because you're just going to have market makers who are going to do that for you. So you're going to be trading with a market maker directly, and then on their back end, they're hedging across all these different chains and centralized exchanges and just getting you the best price that way. And I think ultimately that'll reduce a lot of friction, and you'll still get roughly the same price.
Awesome. Thanks for those answers, and thanks again for the question. Speaking of Binance Smart Chain, we had another question that was asked in advance with regards to how our integration has gone so far, both the good and the bad, and what are the next steps with BSC, and everyone's curious, what's next?
Yeah, it's gone well. So we launched around 2 weeks ago, 1 week ago. It's hard to, crypto time is hard to keep track of. But yeah, it's been going well. We have been seeing, we saw kind of like an initial spike of users when we first launched, like 2,300 different unique wallets trading on 0x API on the BSC chain, like 9,000 trades. But after that kind of like initial spike, we've kind of seen like kind of just gradual growth in user numbers and trading numbers across like a bunch of different 0x API aggregate or integrators rather. So like Dex Guru, Zapper, Zerion, Matcha, like all of them are seeing like kind of a gradual uptick in users, which I think just shows that like there is definitely demand for using smart contracts and self-custody, but on like a less expensive network. What's gone well? Well, overall, I think like the launch has gone smoothly. What's gone bad? I don't think anything's gone bad. I think like one thing that we need to learn a lot more about is just there's definitely some overlap between like Binance Smart Chain users and Ethereum users, but there's also a lot of users of Binance Smart Chain that like probably had never used a like smart contract or like had self-custody before. Like they're probably like Binance users and they like tried out Binance Smart Chain for the first time through like a portal that Binance provided, and like it's pretty neat because I think like we have an opportunity to tap into like a new user segment, but I think a lot of that user segment is based in the East, and we're still learning about how we kind of market and kind of build traction in the East.
Yeah,
anything?
I would just echo. Yeah, I think the thing that could maybe be going a bit better is just getting more visibility on all these different products. I think the marketing channels are different from what we're used to. So for everyone here, help us spread the word.
Awesome. I know this is actually a question that I think about as well. So thank you, Nicholas. Here's a question around just value accrual across L1, L2, AMA aggregators. And I think with regards to aggregators, I think there's also an extension to this. Like, how does it even work when you go cross-chain? Does the middle get squeezed, but can hold, I guess, or does the value get captured at the aggregator level? Thanks, Nicholas, for the question.
This is a tricky question. Like it's super complex where value accrual is going to happen across these like different layers, and I definitely don't have like the correct answer, but I think like we have some thoughts on how value accrual works. I have some slides on this I could pull up. I could run through them like really quickly. Is that cool?
Yeah. Do you want to share your screen and I'll put that front and center?
Sure. Just pull this up.
In the meantime, I'd like to welcome all of the folks who have joined more recently. Thank you very much for joining us and spending the time on this AMA. All right, I see Will, I see your screen there, so let me put that up. I'm gonna just hide the chat to give more space to this.
Cool.
How does that look?
Yeah.
And let me actually hide the, oops, had that accidentally up.
So this is something that we've been thinking about for a long time. And honestly, like I think our thought process around monetization has like been evolving as the space has evolved too. But these are just some slides from like an internal all hands presentation, I think in early 2021, I believe. And so, yeah, basically the way we view monetization across the DEX stack. So first of all, what is the DEX stack? We think there's basically like 3 different layers where you can capture value. The application layer, so this is like the user interface. This is like where an end user is going to consume liquidity. The protocol layer, so this is the layer that kind of connects the demand and the supply side. So that's like 0x protocol, or it could be like Uniswap protocol or whatever. And then there's the liquidity layer. And these are more or less like market makers or liquidity providers, and they make money by taking like a margin or a spread on the kind of the volume that they help facilitate, and probably probably can capture value at each one of these layers. And just as like a quick example, like what would be an example of like the application layer? So MetaMask, you can go to your MetaMask wallet and consume liquidity through their swap function, and they can charge a fee. And an example of protocol layer, so like what's Uniswap is like a protocol, and Uniswap, the protocol, it doesn't charge any fees that go to Uniswap, the protocol, but it does include a 30 basis point fee that goes to the liquidity providers. And these liquidity providers, sit one of them can capture value. And I'll just run through these slides like super fast. So we don't necessarily know how value is going to be distributed, but we definitely have like a number of questions we know we need to answer. So first of all, how is monetization at the application layer going to play out? It depends how sensitive end users are to fees. So if retail traffic is super sensitive to fees, then they'll end up avoiding applications that have a high fee, and they'll go to an application that has a lower fee. But will traffic be very sensitive to fees? Like, I don't think we know that. Like, we haven't really seen very convincing evidence that users are super attuned to fees at the application layer. Second question we need to answer. Protocols, like DEX protocols, can capture value, but typically if a protocol is capturing value, it's basically somewhat zero sum, in that it's extracting value from the liquidity providers. And I think like an example of this is like SushiSwap versus Uniswap. So Uniswap, there's 0 fees that go to Uniswap, the protocol, 30 basis points that go to the LPs. And then SushiSwap, they kind of changed it where only 25 basis points go to the LPs, and a chunk, 5 basis points, is going to the SushiSwap protocol. And so that's an area where there's probably some tension between the people that are stakeholders in the protocol and the liquidity providers. And not sure how that's going to play out, but it's definitely like the second question that we'll need to answer. And then third question we need to answer: how does value get captured at the liquidity layer? I'm sorry if I wasn't planning to run through this entire thing, but it's a problem that like we've spent a lot of time thinking about, and figured might as well just go through it. But how is value captured at the liquidity layer? So the people that are providing liquidity, either they're passive LPs in an AMM, or they could be like an active market maker that's providing quotes through like 0x or something. And ultimately, it comes down to who's able to drive a lot of volume and kind of capture to be profitable with the lowest margin. And so I guess in summary, there's like 3 layers of the stack. There's value that can be captured at each layer, but it's unclear how it's going to be distributed. And those are some questions we need to answer.
Awesome. I know that there's a lot of curiosity about Uniswap v3. I saw a couple of questions in chat. We also had a question asked in advance about what effect do you think Uniswap v3 will have on 0x and DeFi at large? Amir, did you want to take a shot at this one?
Sure. So I think the biggest effect will probably be more of a shift away from like retail liquidity providers to professional liquidity providers, which I think is ultimately good for 0x, because that has been where the majority of our focus has been. But yeah, it's with Uniswap v3, you now need to provide liquidity around a specific price range rather than across the full spectrum of prices. That's kind of the gist of it. So that's really good for capital efficiency. if you know the correct price range to provide liquidity around. And in practice, prices move quite a bit, and I think you're going to have professionals, basically providing a lot of liquidity within very tight ranges, and then moving their liquidity around as the price moves. And that liquidity provided by professionals is going to end up diluting the retail liquidity that are in those same buckets. So I think it'll probably be less profitable for retail. I also think that it's just a difficult decision, as like a retail user, to decide how you want to provide liquidity within Uniswap v3. In the past, it's pretty much just a binary decision. It's do I want to provide liquidity or not? Now, there's essentially an infinite combination of possibilities you could do. So, I'm sure there will be products built on top of it that try to simplify the experience and stuff like that. But, ultimately, I do think it's probably more of a win for professionals. And that is kind of where we see the space headed, at least in, the most traded pairs. I think in the long run, there is a lot of complexity to this, and there will be a lot of professionals providing liquidity and driving down prices. And that's, like I said, that's been our thesis all along. Like our RFQ system, already has, I don't know, maybe like 8 professional market makers plugged in or something like that. And it's going to be good for traders actually who are not providing liquidity, because they're going to see better prices as a result of it.
Great. And of course, if we're talking about Uniswap, we can't talk about Uniswap without talking about Matcha, which, for those of you who are not aware, is a DEX aggregator, similar to Priceline or Expedia in the travel industry. One of the things that I've seen a lot in our own community chat, Matcha community chat, is what's next with Matcha? What's the next evolution? And are there any new products and services being considered in addition to just the token exchange functionality?
So I think it goes back to like our mission and our vision. So ultimately, again, we see a future where all forms of value are represented as tokens on public blockchains, and our mission is to make that all of these assets accessible to anyone in the world, no matter where they're located. And I think for us, like, we view Matcha as a way to onboard the next, currently there's like on the order of like 100 to 500,000 monthly active users of DEXs. And Matcha, we view as a way to bring the next 10 million users or more into the DEX space by providing like a really friendly, accessible on-ramp. But also, there's 300,000 different token contracts on the Ethereum blockchain today. And the trend is just accelerating. Like, if you think about where we're going to be in 2 to 5 years, how many tokens are going to exist? Like millions or like billions of tokens. It's going to be insane. And if that many assets exist, there's going to have to basically be like a search engine for tokens and liquidity. And ultimately, it's probably like a little bit further out in terms of how we're thinking about things, but I really do think that Matcha will become more of like a search engine for assets and liquidity, and it will kind of become like the entry point for how, like a mainstream audience is able to kind of access all of these assets.
Yeah. I think most teams building in this space right now are building for like DeFi native power users who like really understand the technology and stuff. And we're definitely building for the masses. We're fully expecting millions and millions of users to come online over the next couple of years. I can't speak to specific features that we're planning on adding yet, but yeah, I'll just say, we're interested in taking these lower level complex features that have the largest product market fit and kind of repackaging them to be consumable by your average person.
Awesome. And I see a lot of folks typing in Korean in the chat. Those are probably questions. Really sorry, we don't have a real-time translator here. So next time we'll take other languages into consideration. But for those of you who are asking questions in Korean, if you are able to actually ask them in English, that would be great. If not, maybe throw it into Google Translate and we'll do our best. So one of just as a follow-up question related to Matcha, I do see some folks asking about how, if and I guess how Matcha prevents front running. That's something that you want to talk about, or maybe as an extension to that, maybe talking about the RFQ queue system.
Yeah, so yeah, I mean, at a basic level, I guess your first level of protection is being able to modify your kind of max slippage. I think you can take it down to like 10 basis points or so, which is pretty reasonable, and would definitely recommend you do that unless you're trading a very low liquidity pair. Other than that, I think our RFQ system actually has some really nice protections built in. So first of all, when so the way our RFQ system works is, you will say, I want to buy 100 Ether, and that will ping all of these market makers on the back end, and they're going to provide you the best quote that they can for that amount of Ether. And then you'll select the best one, and you'll try to fill that order. So those orders actually will only allow that specific trader to fill the order. So they cannot actually be front run. And then, yeah, in addition to that, they are trading at a completely fixed price. So assuming that order is actually filled, you're not going to incur any additional slippage. And the users on Matcha are like purely retail. There are no bots or anything interacting with it. So I think generally, like, there's fairly low risk of being front run if you're trading on a pair with RFQ enabled.
Awesome. Well, did you have anything to add to that?
Oh, I've seen the question come up a few times. Is there any good news about listed on NASDAQ? No. I do think that Coinbase is going to be listed on NASDAQ, but Coinbase is a separate company. But it is very exciting for the entire crypto space.
Awesome. And this is a question that's related to market makers. I think a few weeks ago, in one of the monthly community governance calls, we did mention that we'd be onboarding. I think Theo mentioned that we'd be onboarding a few large market makers. And so the question is, how is that going and what defines large? And I also realized I did mention RFQ without maybe some folks realizing what that was. Do you mind one of you spending just a quick moment before answering this question? At the basic level, what is a market maker? I think for some folks on the call, that might be a foreign concept, or at least an unclear concept. And then what is kind of RFQ in relation to that? Sorry, I know you touched on that, Amir, but I was thinking that relationship could help provide additional context for those unfamiliar.
Sure. Yeah, I'm happy to explain that. So yeah, first of all, what is a market maker? A market maker is essentially a trader who is willing to buy or sell an asset. In either direction. They're trying not to bet on which way the market is going or anything like that. They're just providing quotes on each side of the market, so that when a buyer comes in, they can make a trade at a good price against that market maker. And in 0x, market makers are very core to what we're doing, because 0x is peer-to-peer rather than like peer-to-contract, like an AMM. So often you're trading directly with a professional market maker if you make a trade on Matcha. And then RFQ stands for request for quote. So this is the system by which you are trading directly with those professional market makers. So I kind of touched on this earlier, but yeah, you will ask, you'll ask our API what the best quote it can provide is, and then our API will ping all the different market makers, and they will send back their best quotes. They're all competing with each other to offer up the best price, and then assuming that price is reasonable to you, you'll go fill it and just trade directly with that market maker.
Will or Amir, do you want to take the question with regards to the onboarding? And thanks for that explanation, Amir.
Yeah, sure. I can take this as well. Yeah, so we have onboarded a handful of larger market makers over the past month or so. I think there's still some more coming online. I would say it's going well. One metric we often look at is like, what is the percentage of like 0x native volume through 0x API? Since Matcha and 0x API aggregate liquidity from all the different decentralized exchanges, we're looking at like how large of a chunk of that is from 0x specifically. How much of it is coming from these market makers? And that number is definitely trending upwards. I think it hit an all-time high of something like 30% a few days ago. I will say that it's one thing for market makers to just come online, and it's another thing for them to actually optimize their prices and be able to provide better and better liquidity. I think that's something that's going to continue evolving over time. And then second part of this question, how is that going and what defines large? I mean, large is subjective, I guess, but these are all professional firms. I would say they trade billions of dollars a year in volume across all the different exchanges. Some probably trade billions of dollars a day, to be honest. But yeah, they're all pretty sophisticated and really know what they're doing.
Cool. Just I saw a quick follow-up question that I thought would be fun to answer. I don't know, Will or Amir, do you want to take this?
So
sorry, the question is, why would a market maker be attracted to 0x over other DEXs or AMMs?
So ultimately, market makers, just like liquidity providers and AMMs, they make money when they're able to like move value and earn like a really, really tiny sliver of like profit margin. And so they just want to move as much value as possible. And for professional market makers, like really what it comes down to is like, okay, how big is this like audience that I'm tapping into? Like how many people are going to be coming to me and asking for prices? And for 0x and 0x API specifically, 0x API is powering a ton of different really cool DeFi dApps that we all use and love, including Matcha and Zapper, Zerion, MetaMask, Shapeshift, and others as well. So like there's just like a really big audience of retail traders that want the best price, and these market makers are able to provide them with lots of quotes. And so that's good for them from a business standpoint. And why would market makers be attracted to 0x protocol, the peer-to-peer protocol for exchange, versus say, like an automated market maker or another DEX? And the answer is that they just have like a massive advantage. Like they can, with a relatively small amount of capital, they can turn that capital over many times a day and provide really competitive pricing that beats, like, say, for example, Uniswap or whatever it may be, where Uniswap requires potentially like tens or hundreds of millions of dollars of assets kind of sitting passively in that pool in order for that that pool to have decent prices. And so yeah, 0x is basically the best tool for professional market makers. If you're a professional, like this is what you're going to want to use.
Thanks for that question, Bill. Oh, sorry, go ahead, Amir.
Just want to add to that. So one of the differentiating features of 0x is that all the liquidity is posted off chain, and then it's settled on chain only once a trade actually happens. So what that means is that market makers don't need to pay any gas costs or anything like that to provide these quotes to users. So it's incredibly cheap for them to use. And then also, our technology is not opinionated on, what types of strategies you use or anything like that. If you're providing liquidity in an automated market maker like Uniswap, you're really bound by the rules of that pool. Whereas with 0x, you could do whatever you want. You could port over your strategy from a centralized exchange or whatever. I would say it is the most flexible and capital efficient and cheapest protocol to use for professional market makers.
Awesome, thanks, and thanks, Bill, for that question. Had an early question. This one gets a little bit more technical, and it's from a community regular, Super the Cool Man, who's one of my favorite usernames out there. He was curious about OpenZKP progress since implementation. Curious to hear about any interesting breakthroughs and exciting progress that the Skunkworks team has developed.
Mind if I take this one, Amir?
Go for it.
Cool. So yeah, thank you for the question, Super. For those that aren't familiar, OpenZKP is a open source library that our team developed, and it stands for Open Zero Knowledge Proof. And it's more or less kind of like an open source library that helps you to build. You can build many different kind of zero knowledge proof things with it, but in terms of what we're interested in for decentralized exchange, this is our effort towards our own scalable decentralized exchange, and it would allow us to more or less package thousands of trades that are happening off of Ethereum, kind of compress all of those thousands of trades into like a succinct proof, and then commit that proof to Ethereum. And so it's much more gas efficient than how things work today, where every single trade corresponds with a transaction that is on the blockchain on Ethereum. And so, this would allow us to increase the amount of trading throughput, et cetera. And so this is scaling is something that our team has been working on since 2018. And our thinking was that having a scalable sidechain that is specific to trading is better, because it will allow us to focus on our core competency, which is just peer-to-peer exchange. But one of the things that we saw happen over the last 6 to 12 months is there's been a number of projects that have rolled out their own scalable sidechains that use zero knowledge proofs or rollups. So Loopring and Diversify, and basically I think what we saw is that like composability of different Ethereum dApps creates really, really strong network effects. So if you're currently a DeFi user on Ethereum, it's like a playground. It's like this massive sandbox. You can go and you can deposit on Compound and borrow and lend and margin trade, and there's all these different assets. But if you want to go onto the scalable sidechain, there's an opportunity cost, because now your assets are locked up in this sidechain. You can't earn interest on it. It's expensive to deposit and then withdraw again. And so, an application-specific sidechain that is only able to facilitate trades is actually something that doesn't have product market fit right now, at least the examples that we've seen to date. And what we've seen a lot more demand for are other networks like Ethereum that have the ability to support smart contracts and composability. And so our decision, earlier this year, we made the decision like, okay, let's put our scaling efforts on pause. There's plenty of other teams that are, that will live or die based upon the success of their own scaling solutions, and it's kind of their core focus. And so, our thought process was, let's put our scaling efforts on pause for now, and let's, get a really good understanding of these other networks that are being built. Let's see what adoption looks like for them. And when we see like a really strong signal that these other solutions are getting users, then at that point, we can make a decision around how we want to expand, 0x protocol to other networks.
Awesome. Thanks for that thoughtful answer, Will. I think this is going to be the last question from the live stream, and then we'll jump to one last question from the pre-advanced question. But this name sounds familiar, but I thought given all that's happening in the world and new organizational structures, now how has it been running a remote first company? For those who don't know, we went remote first during the COVID pandemic. So thanks, Alex, for the question.
Yeah,
hard.
Yeah, it's definitely been a challenge. I think there's been some good and some bad. I think the good is that it's more probably in line with the ethos of the blockchain space, and it really expands like our hiring pool. Before we definitely gave, although we did have a remote team before, I would say we preferred people to be located in San Francisco. But now, we're much more willing to hire developers all around the world, which is great. But yeah, it's, also definitely been challenging just not being able to really see people face to face and hang out. But yeah, hopefully that'll all be changing over the next couple of months. I don't know if there's anything you want to add, Will.
No, I mean, I think like a lot of people COVID's been a lot harder for a lot of folks than us. So it's, we've been fortunate in that way, but yeah, it sucks. Like our teammates are awesome, and like, it's a lot of fun working together on this stuff. Like, looking forward to getting back to hanging out with people in real life, IRL.
Great. Let's see, just a final question here, and definitely want to again thank everybody for spending the time with us. If you had fun and you'd like to see more events like this, just be sure to join our community. You can join us on Twitter, Discord, Telegram. Links are there below. It's also on our website, 0x.org. But yeah, we'd love to hear your comments. How did you enjoy this event? What types of topics or folks would you like to see featured on future AMA or other types of live events? And with that, let me ask the last question, Will and Amir. Whether it's Ethereum or non-Ethereum, I think there's some folks who are curious. What other projects outside of 0x are you most excited about?
You want to go first, or?
Sure. I mean, I don't want to name names, I guess, but I'm broadly excited about scalability technology, layer 2 solutions built on Ethereum. I think optimism is very promising. I think almost every single DeFi project is probably planning on porting over there as well. And the main reason I'm excited about it, well, I guess, the obvious one is it allows users to, actually access this technology at reasonable costs. But it also just really allows developers to do more interesting things. I think it's hard to innovate in this current gas environment on Ethereum right now because you can't really expect users to test your product and pay like hundreds of dollars just to do so. So, really every single design decision you make right now is constrained by the potential gas costs of it. And I think that changes once, gas costs are just close to zero. So yeah, basically any layer one solution that has users right now, I'm excited about. And then, yeah, a handful of layer two solutions that are either already online or coming online to Ethereum right now.
Yeah, I agree. Like I just seeing gas prices on Ethereum over the last 6 months has just been like so painful. Like I just can't wait for these other layer one and layer two networks to grow the opportunity size, allow more users to come into the space. Other than scaling, I'm really excited about generally privacy, like having all of your financial information publicly viewable on a blockchain is like, that's not how the current financial system works. And I think there's like some good reasons for that. So having the ability to have all of your finances on this decentralized trustless network, but also having privacy is like going to be key for a lot of use cases in the future.
Awesome. Let's see. I do notice we have time for one last question. We've got about 4 minutes left on the schedule. Will, Amir, are you folks okay with taking one last question for the chat?
Sure.
Awesome. So we have a question from David about, does Xerox have the ability to provide payment order flow to market makers to offer zero trading fees for users on Matcha and other 0x powered aggregators?
Well, I guess I'll say, first of all, there currently are zero fees on Matcha right now, and probably most of the other aggregators using our technology. And then the way integrators can charge fees on that is very flexible. They can either tack on a percentage-based fee or positive slippage, or just like a flat affiliate fee. But yeah, by default, there actually are no fees at all. So I suppose there could be some agreement with the market makers to pay them extra on top of that. But yeah, they kind of already have that advantage.
Great. So with that, thank you everyone for joining us live. Again, hopefully this will be the first of many live events to come. Want to just thank Will, Amir, thank you for joining us. I know you're extremely busy, so really appreciate you taking the time to hang out with our community.
Yeah, it was fun.
Yeah,
we should do it again.
All right. Thanks, everybody. Have a great week.
Thanks, everyone.